Hey, good morning, traders and investors, and welcome back to the Trading Analysis Wednesday live stream show. I'm your host, Bennett Tyndall. We hope you're doing well today. Happy Wednesday, August 3rd. Can you believe we are already into the month of August? It's been quite the summer here in Texas. We've had several triple-digit 100-plus degree days. It's been a little interesting following last year's winter. I think you all were up to speed on the events of our Winter Fest here in Texas. But anyways, glad to have you. Thanks for joining us. We've got a good show in store for you this morning. Markets continue to charge higher, and although we are most certainly seeing probabilities shift in favor of upside resumption, we are also tracking an alternate that would suggest this is still a corrective rally, and that's primarily due to the fact that we still have a wave count in the dollar that says we could hold support and move higher. We have wave counts in treasury yields, obviously, that suggest we hold support and move higher as well. And then, of course, we have the crude oil wave count. At the same time, we've seen a nice move up in gold, which would support the idea that our 5-wave completion in the dollar is upon us. We'll get to the charts in just a few minutes. We don't have Alex in with us today. He is still on vacation, but rest assured, I will take you through the macro scene. We'll look at gold. We will also check out crude oil and the dollar. As you can see, bottom left-hand corner of your screen, futures are sideways to higher this morning. We had AMD reporting earnings yesterday after the close. Had a top and bottom line beat. Guidance was slightly disappointing. And the interesting thing regarding AMD is after meeting the 72, 75 area support zone that we were tracking for so long, we've had a nice move up. And going into earnings, we were approaching a confluence of technical resistance. We had 5 waves up. So a consolidation effort following the report, I think, is warranted. And I only think that will present an entry opportunity. So let's bring in the trading analysis team. We also have company founder, Mr. Todd Gordon, on with us today. How you guys doing? Welcome, welcome.
Hey, good morning, guys. How's it going?
Good morning, good morning. Doing well. We're trying to not, Terry and I are trying not to melt here in Texas, but our things in upstate New York.
It's just been hot everywhere. It hasn't been hot in like the Western Hemisphere. It's just been, we've got, even in Europe, they're cooking. London, it's everywhere.
Mm-hmm.
Yeah, they had 100-plus degree temperatures in London a week or two ago.
Yeah.
It's following the coronavirus, it's par for the course. Sorry.
Yeah, no, that's all right. We're just talking about Alex too, and this is kind of a left turn, but it's trading in the summer, guys. This is just kind of a reminder. Usually it's quiet. Sometimes it's not. I would say this is not one of those times, but Alex is, and we're going to speak behind his back fondly and dearly. We love him. I've known him for over a decade. I've been to Serbia twice to visit him. And, he's such a workaholic, man. How many times, and Bennett and Terry, obviously you've been working, I've been working with him more than I have with you, but I've been trying to get him to take a vacation for probably half a decade. This guy just fucking works as hard. Like he just works until exhaustion. We try to get him to take a vacation and then he's like, no, I'm going to keep going. And finally got to the point where I was like, I need a break.
Sleep.
He doesn't get a lot of sleep either, no.
He's on 16, 18 hours a day.
I tell you what, Todd.
He is.
Yeah, I was going to say, over Christmas break, I said, hey, man, take a week off, go enjoy the holidays. And he powered through it. He kept his eyes in the crypto markets. Just doesn't want to take a vacation. So I'm glad to see him.
It's hard to do, especially. And the point that I was making is it's sometimes when summer is quiet, it's really important to step away from the screens. Like this is the trading or investing. Like it's a job where your butt is strapped to the seat. You're in front of these energy sucking screens. And granted, they've got more efficient over the years. When I used to sit behind CRT monitors that are this big and irradiate a bunch of heat, but it's very intense. It takes a lot of concentration. There's a lot of emotion involved, especially when you're trading real capital and your own money. You've got to step away. Let me shut my office door here. The cleaning ladies just got here, and I've got a couple friends in town here, and I'll wrap this point up, but it's so important, especially if it doesn't matter if, you're at home trading your $5,000 account or if you're trading for an investment bank and multi-millions. We live in a town in upstate New York where Goldman Sachs has a private wealth management business called ACO, and they run, $50-70 billion. It's amazing. So I have a lot of friends who are essentially are Goldman employees way up here in upstate New York. It's crazy. And Goldman, and I remember this in the city, has mandatory, I believe, 2 weeks off twice a year. I hope I'm getting that correctly. It's either 1 week 2 times or a week and a half, but whatever. They make them take time off to get away from the screens, recharge, because again, it's such a mentally challenging, emotional business that we're in. And sometimes you don't realize you need a break, and we need to step back, and you come back rested and relaxed, and you get away from the screens. You have a whole new perspective. You trade better. It's so important to do as a trader, even if it's a busy market in the summer, and this is the time to take time away. So I'm glad Alex is finally doing it. He's on the beach in Montenegro, and I hope he's enjoying it.
Most definitely. Well said. And glad to see him taking some time off. As you said, it's been, what, 5+ years since the guy's had a real vacation. So hopefully he comes back with some good stories, maybe some good pictures and videos, and re-energized as a result. Because it's true. It's very true. You need to take time away and rest. Very important.
Yep.
All right, so let's jump into it. Anything specific either of you guys would like me to cover? I'm going to take them through crude, the dollar, gold, and the S&P.
Yeah, interesting on that gold that you're calling the bottom there. So that's been it's moved up enough. It actually looks starting to look pretty good. Gold miners,
It does.
We'll take a look at those when I get my turn. But could the turn around in the gold be the catalyst that we see the gold miners then take off? So that's the play.
Just watch it, guys. I think we're starting to. The market has accepted where the terminal Fed funds rate is. We're going to 3. I think it's 3.35, 3.5. The consensus is inflation is topped off. Remember that the key mover, and specifically FX and the commodities, those interest rate differentials, the inflation play. It kind of feels like the market is reaching sort of a maybe homeostasis, reaching some kind of neutrality as to where inflation is going to be. And that certainly could change, but that will have the macro market calm down if, in fact, we are at, we have a topside view where rates are going to go. And the interest rate differential between us and the rest of the world will start to become accepted. You're not going to see as much movement in, I think, commodities, currencies, as related rates, and I think that's when activity picks back up in the stock market. So just keep that in mind. That macro, 4 major asset classes all interacting. It's important to know that flow.
Yeah, very true. And I do find it interesting that we can arrive at completed counter trend corrective pullbacks in the indexes, while at the same time we have wave counts in the dollar and the 10-year yield that suggest a major 5-wave move is complete, and we could be seeing a bid in bonds.
In that macro relationship, not to keep going, but that macro relationships helps you filter through the multiple wave counts that you see in all the major assets, all the major markets in those 4 asset classes. It sort of that intermarket flow back and forth will help you sort of alleviate some of the subjectivity of Elliott Wave.
Yep, very true. All right, let's hit it. Hard right edge of the MotiveWave platform. We'll be back on the other side. Catch you guys in just a couple of minutes. All right, good morning. Once again, we appreciate you all joining us. Let's jump into it. Hard right edge of the trading analysis edition of the MotiveWave platform. We're going to first take a look at price action in gold. And if you've been following our public content here on the YouTube channel, I put out a piece last week talking about the possibility that we were meeting support in a counter trend pullback in gold that could potentially be coming to completion and setting up for upside continuation. So first of all, let's just take a look at the daily chart here for gold going back to the August 2020 high. And it was in August of 2020 that we started a counter trend corrective retracement. We moved lower in 3 waves. We then proceeded to rally in a 3-wave corrective trend. The move to 2078 in March, while it did look to potentially be upside continuation with wave 4 completing in February, the 2078 high that we had proved to be corrective, and we have since seen a 5-wave impulsive trend to the downside. It was actually April 19th that we took advantage of the expected downside continuation in gold with our clients. So looking at the overall 4th wave pullback, and for those of you new to Elliott Wave, counter trend corrective pullbacks essentially go against the higher degree trend. So if we take a step back out to the weekly, I think we can all agree that from the bottom left to the upper right hand corner of your screen, dating back to December of 2015, we have a nice solid 5-wave uptrend here in gold. We have a 5-wave move up into 16, wave 2 back into August of 18, a big wave 3 rally up into August of 20. At the time, the wave 3 resistance here in September of 19 was the upper boundary of our base trend channel. As we extend the base trend channel up to the wave 3 high, that is now essentially mid-trend channel within this overall structure. As we move down off of the wave 3 high, which it is worth noting that our wave 3 high was a 200% relationship to wave 1. So that's very appropriate to suggest that this is an impulsive trend and that this is not an overall corrective rally into the August 2020 high. So what I find fascinating about this wave count is the fact that from August of 20 down into March of 21, we have three back into the 2078 corrective high, and then back down to the daily time frame. We have since seen 5 waves meet our 1678 downside support target, and we've had a fairly decent move off of the low. If we take a look at percent change, we've had a 7.4% rally in gold from that low, and we're now approaching kind of a confluence of technical resistance. So the preferred view says that, hey, 5 waves in the dollar, complete. Counter trend pullback in gold, complete. Counter trend pullback in equities, complete. Given the alternate that we are watching in the dollar, I think it is at least worth acknowledging the possibility that zooming back out to the entirety of this pullback from August of 20, that instead of this completing with a 5-wave trend, this actually completes in a 3-wave trend, which turns the overall 4th wave into a complex. Regardless, even if this is the case, I still feel gold will present a tradable low after consolidating the 7+% rally that we've had. So the preferred view says that the flat is in. And if we zoom in here on the daily chart, and in fact, I'll take you off of the daily down to the 195. Here on the 195, you can see the final 5-wave decline that we had into July. 5 waves completes, and we've since seen what appears to be a 5-wave rally in the making. Now, while it's possible that 5 waves up is actually complete in the case of gold, I do think that we hold support kind of 1740, rally up, and then see a wave 2 pullback. So we're going to be watching gold. If this is a 5-wave completion within the dollar, these 2 wave counts and these 2 pivots would line up quite well. Over to the dollar index. If you caught my update last week, we were talking about the possibilities here in the dollar. And if we just hide all of our smaller degree waves and just kind of dissect what's actually happened since 2008. Since 2008, I see a 5-wave rally, and I actually had a comment on our YouTube channel regarding the instance of intraday overlap between our corrective retracements. On a closing basis, there was no overlap, therefore I view this to be a valid 5-wave trend with this wave 4 pairing up to the wave 2. So, looking at price action in the dollar, we can count a completed 5-wave move, and the area of resistance that we recently found and started to pull back from excuse me, is a confluence of channel resistance and fib retracement resistance. Going back to the 2001 high, if we simply draw a fib retracement of that decline into the 2008 low, you will see that the 786 retracement of that decline comes in at 108.17, and if we zoom in here on this green wave 5, you can see that that is right where we got shut down, and that also happened to be the upper boundary of our base channel. So it's entirely possible that we did in fact complete 5 waves up. And if this is the case, it would line up well with our view in equity markets. Now, alternatively, if for some reason we do hold support in a counter trend pullback and start to turn higher as we did yesterday in the past 2 sessions, perhaps we do visit the more significant upside fib levels. And if this happens, I do think the complex alternate in gold is possible. And if this happens, I also think that the idea that the equity markets are rallying in a corrective fashion is something we shouldn't yet dismiss. I continue to remain bullish. I do think following the move off the lows that we are likely resuming the uptrend, especially when we take into consideration the totality of the circumstances across the macro scene. Now over to the US market indexes. Looking at the S&P 500, you will see here that going into the June area low, we have now since seen from the low in June up to the high this week, a 13.97% rally in the S&P. We are now approaching upside resistance, and I do think it's possible that a wave 2 corrective pullback sets in. Now, if for some reason this market just continues to melt higher, we need to be open to the possibility that instead of this being a leading diagonal, it's actually a series of 1-2-1-2 developments. And if this is truly a series of 1-2-1-2 developments, we might not see a larger counter trend pullback until we meet the 1-6-1-8 up near 42.46. The bigger takeaway I feel will come once the clarity is offered in regards to the leading diagonal versus the 1-2-1-2 development. Now here in the NASDAQ, here in the S&P 500, I think we can all agree that the guideline of the right look is being challenged here with the significance of the overthrow in this wave green 5. That doesn't mean that this is not a leading diagonal. If we look at the NASDAQ 100, you'll notice here first, before moving to the NASDAQ, my apologies, the true invalidation of this being a leading contracting diagonal does not set in until 42.16, but I do feel clarity will be achieved well before a 4,200 handle bid in the S&P. So that's the S&P, either 1-2-1-2 or a leading diagonal. Given the fact that the trending stock sectors and industry groups that have led this market from the June low are already in wave 5 positions, I favor the leading diagonal. It would shake out any weak hands who allocated on the long side throughout this rally, and it would also trap some bears prior to the larger upside breakout setting in. As an example, we take a look at the semiconductor industry group, the SMH. We've got a nice 5-wave move up here. Looking at AMD, we have a similar 5-wave move that met resistance and should be starting a 3-wave pullback. Now over to the NASDAQ. Looking at the NASDAQ 100, I really feel the NASDAQ 100 is the better sentiment guide in regards to determining if it's a leading diagonal or if it's a 1-2-1-2. Reason being, in the case of the NASDAQ, the overthrow here is much less significant. It's more appropriate, and it's finding resistance at 2 major swing wave lows which occurred in February and March of this year. Meaning the NASDAQ is up against resistance and should see an ABC pullback. Now, if this market just continues to melt and panic higher, then absolutely a move above resistance in the NASDAQ would signal to me that chances are the S&P is also going to invalidate its diagonal, and we're going to be on our way to new all-time highs later this year or probably early next. Now, we have to consider both possibilities, and this is the last chart I have for you. If for some reason the dollar holds support, if the 10-year yield continues to move higher, we need to at least consider the possibility that this is a larger corrective retracement that could potentially take us up to trendline resistance. Even if this is the case, this is only going to present an entry opportunity. And frankly, this is a back-of-the-pocket alternate that we have on track to offer context in the event Plan A does not go our way. Plan A says the low is in, and we have either a leading diagonal or a 1-2-1-2. That view of the low being in is well supported across the macro scene. So that's it from me this morning. Let's jump back over to the trading analysis team, and we will get Mr. Todd Gordon set up. Sir, what do you guys think? What do you think?
Just stop calling me Mr. Todd Gordon. Just call me what, something other than that. Good work there. And too, I think man. It's so clear the rotation back into growth that's been happening for a while, and just such a clear 5 up in AMD and NVIDIA, I think is very telling. And what's interesting, Terry, I don't know if you noticed this, but within technology, the haves and have-nots within semis is widening, because actually semi relative strength within technology is actually falling away. So there's a lot of chips that are underperforming, but there are a few that are not only outperforming the semis, but I think leading this rotation and growth, and ultimately the index is off the low.
Yeah. Semiconductor stocks, they're mostly staged inside the improving quadrant on my weekly RRG, but they just don't look quite ready to make that big advance. So we've got to continue to monitor those closely.
Yeah, there are on our semi playbook for August, we have, I think, 6 or 7 semi names that all show the exact same 5-wave move up. But there are many within the industry group that just aren't exhibiting the same impulsive characteristics. They're just not quite holding support or seeing the rotation back into them as the NVIDIAs and AMDs of the world have seen. So
Lam Research, though, does... Yeah, Lam Research appears to be the first to be giving us a blue improving weekly signal along with that easterly heading, and that means it does have rising relative strength. And I want to see more of those semis start to develop into that pattern before we really just jump in. So again, it's just a constant, like you said when you start off, you sit here, you watch, you wait, you plan, and you really need to demonstrate a lot of patience and determination when you're looking for these things. So don't let FOMO drive your trading.
Very true.
That's for sure. One that's a good point. One of the sayings that stuck with me as a trader over the years is the opportunity of a lifetime comes along every couple of weeks in the stock market.
As long as you're there to catch the wave.
Well, no, I mean, there'll be another one next week.
Right, yeah.
But
hey,
let me jump in. There's
you got to be aware.
Yeah, exactly.
Before I throw the screen to you, I see option chain Tesla. Is that correct? Just making sure you have the right screen.
Yeah, I was going to. I was just going to take them through. Do you have a before you flip it over? Do you have a strong outlook on Tesla right now?
I do now. No, I do actually. We've got I think at this point the corrective pattern, although it was looking favorable for quite some time, the minute we broke that range, it had us pivoting right to the bullish wave count that said, hey, look, the corrective pullback ended in May. It just took a little while for the wave 2 shakeout to unfold, and we're moving higher in a third of a third. Okay.
Yeah, I was just gonna kind of revisit Tesla. Let's just talk about two stocks. So I did CNBC yesterday, and we talked about they throw the three stocks that are moving: Pinterest, Uber, and Caterpillar. So Caterpillar reported earnings, and then there was some big movement in Uber and in Pinterest. Pinterest had an activist kind of get involved, took like a 9 or 10% stake. So Pinterest moving up, they were talking about that. I was just going to comment on that. And then Uber had a big move up off the low. So just kind of look at that chart, maybe set up a trade. And then just touch on Tesla really quickly. A couple names that I'm watching for you, sort of active traders, if you like, if that is helpful. And I'm going to try to do this in least amount of time possible. But the way I talk, that's not likely.
Sounds good. Take it away. The screen is yours.
All right. So let's do Uber quickly. Anybody holding Uber in the room here, guys? Anybody holding Uber? Let me just show you this chart real quick. So it's Tesla. I just want to start. Oops, it's not Uber T. Okay, so Uber was basing for a long period of time here, underperforming the market. I'll get rid of the wave count for now. Big old sharp drop. And as I went into CNBC yesterday, these are my notes. I'll just show you what I was talking about there. So Uber, we've had a big rotation into growth. It's been basing. Breakout would happen from about 31.5, depending on how you draw the downtrend channel. I'll show you that real quick. I thought this was interesting, though. A couple fundamental notes. They were expected to lose 27 cents a share. So Uber is still not even profitable yet. They actually lost $1.33. Whoops. But it was about almost $2 billion in loss from equity investments. So the street kind of gave them a pass on that. Their margins were increasing slightly. And the big deal was they generated some positive free cash flow. And the street kind of freaked out about it. And that's what created a big move up. I think it was a lot of short covering. I just want to talk about this quick and sort of put it in perspective. So they had $29 billion in bookings. How many people booked Ubers? That's up 33% year over year. And of the $29 billion in people who pull out the Uber app, which I use all the time here in Saratoga, $8 billion of it is revenue. Okay, that's up as well. So that leaves a 27% gross margin, and a lot of that goes to the drivers, right? So they have for a tech company at the valuation that they do, they don't have earnings, so you can't do an EPS or forward earnings. It's a pretty hard, I think. It's a pretty hard argument to make that longer term this is a good investment. The only way that they can improve that margin is to go to autonomous driving. And there's obviously some really stiff competition for autonomous driving. I think Apple and Tesla and Google and Amazon I don't know how Uber competes longer term. So I just, it was all the news yesterday. It was all people were talking about on CNBC yesterday. So like, look, I think Tyler Matheson didn't really like that. I was like, well, I don't really love it. If you want to take it as a trade, you can. So, the market was basing. All of a sudden, Uber is basing. All of a sudden, we got the earnings, got a pretty good break out there. So, the way I would look at this short term, and I might consider this as a trade, but it's important to know that, we have channel resistance right here at about 31.5. We have, I think, of a third, which means we're going to have a wave 4 pullback. So, I think if you want to do it, there's a couple things you got to be aware of. Wherever wave 3 tops out, wherever we start to roll over, we need to start to have our wave 4 projections in place as to where you could buy the pullback in Uber, 27, 26.5. And again, depending on where we top out. And if it starts to roll over, then you can throw your wave 3 up there and say, okay, we have a pullback here. So then if we do our typical wave 4 projections, okay, then you start to get a zone in here. And then to set up the trade, remember, we have that long-term channel in Uber that's going to come in around 31.5. So, if you're doing options, you can do something like buy it here, buy 28, sell 30, 31 call spread, knowing that we have this pretty significant channel in play. Okay, so just want to touch on that quickly. The other one is Tesla. I was going to just take you through a quick options trade in Tesla. I kind of dusted off the trading gloves here, and I jump back in. I throw a tweet up. So you could see that Tesla was performing extremely well. Tesla was getting a lot of bad press with everything that's going on with Twitter and with Elon, and he's getting very political lately. But if you look at the pullback here, with all the bad press Tesla is getting, if you look at Tesla chart on the weekly relative to the S&P. So this is Tesla into the SPX. And keep in mind, Tesla is part of consumer discretionary, and many would argue technology as well. Those sectors, ever since the end of 21, have been massively underperforming the S&P. This relative strength ratio would be dropping. Tesla went flat. Tesla maintained an S&P equal performance. And if we go against the NASDAQ, Tesla actually outperformed the NASDAQ. So, a lot of people, I could feel the Tesla bears coming back up and saying, oh, the stock's going to 600 and 500, getting crushed. And I'm watching those earnings that came out, watch the deliveries. I'm watching the revenue, the net revenue they're producing, selling like 1/3 or 1/4 the amount of cars that legacy automakers are. And it's acting extremely, extremely well. So when Tesla started to move up post earnings, I'm like, okay, I kind of think that we're in a wave 3 here. So green 3 is in progress here from July 13th. And I had us as a 1-2, little breakaway gap, and 3 of 3, 3, 4. So I put a little trade on, threw this out in Twitter, and just kind of wrote it here from 835 up to just above 900. And I can just show you the chart here. So this is good. This is the actual trade that I put on from here to here. Nice little trade, 4 option contracts. I don't know, probably 9, 10, 11, 12,000 in, turned into a $40,000 trade. So made $25,000, $27,000 on the trade. So feels good to be trading again. But the key is you got to know when, from the wave count and what the sentiment is, being very bearish market, bearish sentiment, Tesla with everything that's going on with Elon, and then the wave count starts to shape up. That's when you can get these pretty big moves. So I just want to update you. I think what's going on in the wave count, and those of you who are short-term option traders, I think that the wave 3 of the 3 is done, and then we're going to pull back here in wave 4. You start to do a little bit of a time comparison. In fact, let me get rid of these. Those are my entries from the earlier wave 3 trade. So this was obviously a directional option trade, just buying calls using leverage. But then I think we're going to settle into a little bit of a wave 4 here. And if you look at the time elapsed in wave 2 compared to 4, that starts to help you figure out what expiration you might use. And then I'll shift for another time measurement in there, 4v2 and 4v3. So kind of looks like we might get out into next week, August 8th, maybe go out into here into August 11th. So I think you actually might look at a little short-term bearish butterfly. You don't want to get short. You don't want to buy puts. And I saw a couple of our members in the Discord channel, guys buying Tesla puts. And I'm like, why would you short, the strongest stock out there? there's a way using option structures that you could do it a little bit more, I would say, reasonably. So this is these are options that you could go 9 days out to the 12th, or 16 days out. I might go 9 days out, and again, we're looking for a little bit of a pullback here. The blue fib is the upper target. Green is the lower target. So we're looking to get, maybe around 880, 860, 840 here. So what you could do is sort of a butterfly that takes advantage of, a little bit of a negative delta. You get some time decay and just try to consume some time in the way for a pullback here. So if you go out here to the puts, we're trading at 901. You look at the 850 puts, probability out of the money is 72%. So the market's only saying that we have a 28% chance of getting to 850 9 days from now. So you might do a little buy, butterfly, 850, maybe we'll go up to 890, 40 bucks up, $40 down, 810. You could do a balanced butterfly, costs you $6.10, analyze trade 610. And if the market gets down to 850 in the next 9 days, you're making 3,240 bucks. The risk is 610. That's the expiration. And then the purple line, it's going to be this one over here. The purple line is going to be your P&L throughout the trade, each day of the trade, right? So, if we're August 9th and we're down at 860, maybe you're $340, $400, whatever. And then as you get out, you're going to see that purple line get higher. August 12th, if you're at 850, you're at, $1,130 right there. So, that's something I might look to do here, just to continue to play Tesla. Seems to be reacting well, just to get down into the zone. And the minute you have evidence that wave 4 is over, you might get out of it. Wave 4 should be sideways, because wave 2 was very directional. It looks like a zigzag. And that usually means, by the guideline of alternation, that Tesla will do that. So just kind of go sideways. So that's one idea. And if you want to give it a little bit more of a bearish tilt, if you're a little bit more bearish, you could do this. You could take the 810 and bring it up to like 815. And then you're going to see it's going to cost a little bit more, but now you won't lose money in the downside if it really craters. And that's just bringing that lower put strike up. So just a little options trade idea. Seems to be that Tesla's doing well. And again, the point is, it's a strong stock. Don't want to be outright short, but you can use the elevated volatility to take advantage of this and kind of expect volatility to come out. Vega's only at 8.66. So just a little options trade idea for you. Hopefully that made sense. I'll turn it back over to you guys.
Very good. Much appreciated. Let's get Mr. Terry Long set up. We'll pass the screen his direction. Solid work there on Tesla. Let's see if that wave 4 begins to take shape. It's had a big move up after the sideways consolidation. We've got about a minute and a half to market open. What was that, Todd? I didn't mean to cut you off.
Oh, yeah. No, big move up for sure. Yep.
All right, sounds good.
Send it to Terry. I want to see one of the rotations.
All right, sir, you ready to rock? I got the screen share ready to rock. It's ready to go. Uh-oh, we lost your mic. We've lost.
There we go.
There he is.
Muted. Didn't want to interrupt Todd.
Oh, there we go.
No worries.
Let's go.
All right, take it away. We'll be back on the other side to wrap up.
All right, traders. Terry Long here, tradinganalysis.com with your weekly sector focus. Let's give you a recap here of what's been happening for the last couple of weeks here. Just finished the month of July with a pretty nice move higher here in the markets. We had 3 up weeks in the S&P, 3 up weeks in the index, just that one down week. Now, markets now this week kind of starting to take a bit of a pause here, but we did add another 4.26% to the prior week's gains. The S&P did surge higher on the news that the Fed hiked the interest rates by 75 basis points. Now that we've got that behind us, and despite the second quarter negative GDP results, really, the market just continued to lift higher on Thursday and Friday. And the index rose in a similar fashion, up 4.45% last week. That's really impressive. This week, Monday and Tuesday, price action's really just kind of taken a pause here. We're going mostly sideways. S&P is down just slightly, down 0.95%. The NDX is down 0.36 on these first 2 days of trading, and of course the market bell just rang there. So if we take a look here, this is last week's sector performance. Energy was a big, huge boost last week. Both Chevron and Exxon posted significantly positive earnings report. Energy sector soared 10.22%. Now, those energy stocks had been broadly retracing their June decline, right? They took a steep decline in June, and now they're on their way back up. Utilities, industrials, consumer discretionary, and real estate sectors last week did outperform the benchmark S&P. Let's get this out of the way. Let's take a look. This is Monday and Tuesday here. It looks bad, but it's really just the scale. I can kind of shrink that scale back down, because if I had that 10% that we had in the energy way up here, I had to zoom in. You see, really not much happening here in the markets, on a similar scale to what we had. So don't let that scale get you worried there. But really, all 11 sectors were down. Let me pull this slide over, and we'll see what's happening now that the bells come. We got pre-market conditions. XLY, that's consumer discretionary. It's up 1% today. Communications is up 0.2%. Healthcare, healthcare, I always thought of it as a value stock, but somebody told me there's actually quite a bit of technology in healthcare, and some places they consider healthcare to be in that group of growth stocks. So growth is doing pretty well. Here is the technology sector, down just slightly, right? So all of this is outperforming the S&P right now. To the downside, though, the true value sectors, real estate, staples, industrials, and energy, they're all showing us negative here. Looks like we lost my chart. I must have clicked on something there. There's that NDX. Let's bring that back. Let's go over here to our sector scoreboard. Relative strength sector scoreboard continues to morph, and it does show sector rotation occurring here in the markets. I'll animate this for you a little bit. These are weekly trending bars. One of the things that should stick out, in addition to the energy continuing its fade to the left, the fact that there's nothing right now in the leading quadrant, but we do have technology and consumer discretionary sectors. Both these vectors last week now are in the blue, and that blue color there tells me that their weekly price action is now in a strong improving condition. So we have a big, huge push here in consumer discretionary up into this improving quadrant. The technology sector turned blue a couple of weeks ago. It does look like momentum's rolled over just a little bit there. Is stalling as we're kind of hanging out sideways here. So got a couple of things I want to share with you as we were talking earlier here. I do want to mention that let's see here, this real estate. So the real estate sector actually had turned blue at one point. Looks like it's turned back to the red again. But the real estate sector had taken a long dive, and now it's actually hooking and working its way back up. It is lagging, underperforming. It's got a little bit of momentum coming into it. So you're going to have to be selective if you try to jump into that. The financial sector just does not want to catch a bid. Financials is hanging out here in the lagging quadrant, does not want to put itself in a leading position. We've also seen the materials sector move lower, and down into the lagging quadrant here. I'm gonna skip through a couple of charts here real quick. Energy. This is that energy trade, that big, huge decline we saw in June, and we're getting that bit of a retracement of that. Although I think the momentum is now stalling and slowing down as we've gotten back up here to this 50-day moving average. Yeah, price is above the 200. The 20s, slope of the 20s kind of turned north, but it does look like we're starting to lose out a little bit to the upside. I was looking at crude oil this morning, was trading below 94 before the market opened. So it's come off of that $100 mark. we've got a forecast for a little bit higher push in energy and then possibly a larger decline. I'm going to jump over here to technology sector and we'll take a look here. Bennett's got better wave counts on this, but I'm tracking some of this stuff. Here's the point where we had that weekly RRG turn blue. Now I've got hike and ashy bars, candle bars here. These greens are the uptrends, the reds are the retracements, and we've been in an uptrend, but you can see the momentum has just recently dropped off here just Monday and Tuesday. But we had a nice little strong uptrend. We really think this is an impulsive move to the higher, and it's going to have continuation. This is the top 30 stocks in the XLK that I track relative to the benchmark S&P. When you look how many stocks we're now seeing with rising blue, improving trends. Even PayPal got a huge boost after earnings yesterday. I think it jumped 10 or 15%. I don't have those numbers in front of me. MongoDB is looking good. Intuit, CRM, Salesforce, Autodesk, Qualcomm, Accenture, and here is Apple, our beloved Apple, a beautiful, nice, rising blue trend vector, northeasterly headings. Who could ask for more, right? Just got to get your trade setups, identify those proper points. Here's PayPal. There it is. It's up 13% this week as we're speaking. So I see a lot of good stocks out there in the technology and also in the consumer discretionary. Let's pop this up real quick and we'll show you what's happening here. This is the top 30 market cap in the XLY. Now, not everybody's participating in this, but I will say there's hardly anything in consumer discretionary down here in the weakening quadrant. There's several stocks that, they're not Amazon. Believe it or not, Amazon and Tesla are not the only thing in the consumer discretionary, but Dollar General, AutoZone, McDonald's, O'Reilly, Yum Brands. I know Yum took a beating last night after they got their earnings report out, but TJ Maxx and Chipotle. All of these guys have been in the leading quadrant, look to continue to stay in that leading quadrant, and they look to be being joined by many other consumer discretionary stocks. We got Home Depot. We haven't traded Home Depot in a long time because it's been in a big, long decline. It needs to prove itself, but it's just about ready to push over into the leading quadrant. Even home builders, D.R. Horton and Lennar, have actually found their way back up here in the leading quadrant. Starbucks up here. We've got Tesla and Amazon. Look what happened here to Amazon. Amazon now has, here's a couple of weeks ago. This is going back to July 15th. We're tracking Amazon down here in the lagging quadrant with this red vector. Amazon has continued to push itself up into the improving quadrant. Now it's working on its second week in a row of a rising blue trend vector. Guys, we're going to have to find the proper entry points to get on these trades. They push themselves up pretty good, but now you know what comes up. We get five waves up. We need that 3 waves back. That's going to set us up, I think, for a nice new long entry. That's all I've got, guys. I'll send you back to Bennett now.
Very good. Much appreciated. Just checking through the questions.
We threw on the screen real quick. I just want to echo what Terry was saying. That was a good rundown, Terry.
Absolutely. Screen's coming your direction right now.
Sorry, I'm still not. Oh, here we go. I'm getting used to this new GoToWebinar. As Terry mentioned, so in the two wealth management portfolios that we run for New Age, we increased those 2 main sectors that Terry mentioned. It goes into that rotation into growth. We increased technology by 4.5%. We increased consumer discretionary by 1.7% and communications 3%. And this is in the tactical dividend portfolio. So I'll show you that. And then, I'll show you here real quick. Terry, we hold Home Depot, and we actually just increased Home Depot to a 2.5% holding. Home Depot is looking good. I put Starbucks back in the portfolio, had them for years, caught them over the last year and a half, but it looks like the restructuring is going. Howard Schultz, I think, is doing the right thing, and they're trying to refocus on growth. So I like Starbucks. And again, the consumer seems to be handling things fairly well, as much as they told us it wasn't going to happen. The news, I would say, the talking heads for everyone who wants to grab your attention. And then the growth portfolio, This is a little bit more active, trying to overweight tech and comms and consumer discretionary. Increased technology quite a bit by 9% on July 20th. This was our last rebalance, and then increased consumer discretionary and communication of 3%, and this is what we hold in there. So, there's been a pretty good rotation into growth, and the market is responding well. The other thing I was going to finish with is if Tesla does make a new high, that trade idea that I threw out there, you can cancel it. If you put it on, you got to have a stop loss on that. So if we do start to fail, I will look to revisit. But Tesla continues to be strong. If we break new highs, break channel resistance, bets are off, and I got to go back to the drawing board on that one. All right, that's all I got on this end.
Very good, appreciate it. Yeah, speaking of Home Depot, I actually just sent this chart out last week in an email. Take a look at this ABC decline. I've got the screen up with all of us. Just a nice 5-wave decline, 3 back. Nice ending diagonal here. Wave C didn't even meet equality to A. We had nice momentum divergence into the low. Now we're trying to get back above that downtrend resistance with a nice impulse wave.
That's the thing. There's so many, so many of these stocks. It's beautiful. There's so many stocks that have pulled back. The idea is to find the one. I think they're all going to come back. I do think the low has been seen. I think the sentiment was so incredibly terrible. And just the idea is to find the stocks that are going to give you the most alpha or outperformance of the benchmark on the way back. That's the game that we're in here. We're trying to buy the best pullback. So there's so many stocks that look like that. I mean, even look at Roblox. Have you guys watched that one? 25 to 45 in like a month. RBLX, like everyone was counting it for dead. Like that stock almost just doubled from the lows. And it was still a $25 stock. It's not like, it's not like Zoom or whatever that went to $9 or DocuSign, whatever the low is. I mean, it was a high flying stock, but it didn't get absolutely killed. I mean, poor DocuSign. Where did that guy go to? I don't know. Whatever the low was. But anyways, just keep an eye on that one. So that's all I got, guys. I'll stop.
Sounds good. Good show. Appreciate you all tuning in. Markets do look to be confirming the low. We were right in June, calling for the continuation move lower after 5 waves up. The bearish count I was tracking off of the recent June-July area low looks to have invalidated, and we're going to be looking for the tactical entries with our clients. So, hey, appreciate it. If you did enjoy the content, please subscribe with notifications. Let the YouTube algorithm know to distribute it accordingly. And we'll see you guys back same time, same place next week. No Crypto Lab tomorrow morning with Alex. He's on vacation, but he'll be back live streaming as soon as he returns. All right, sounds good, team.
Ethereum, one thing on that, Ethereum, I'm looking at Ethereum, Bitcoin, the ratio. Ethereum's outperforming Bitcoin. Ethereum's a place to be right now if you're looking back and forth. I mean, the correlation Bitcoin and NASDAQ is still very much there, but Ethereum is outpacing that. So that pullback looks pretty good, and I think you could use that as a leading indicator too to where risk trades are going.
Yep, absolutely, absolutely. All right, appreciate it. Have a good one, members. We will see you in about 17 minutes for our weekly webinar. Terry, Todd, appreciate it. And we'll see you guys next week.
Thanks for having me, guys.
Sounds good. Take care.
Bye, guys.